Good afternoon, Bill. Thanks for joining us.
Thank you.
So we've just heard from the ECB that the rates which they cut last month, they're keeping the same this month. That's no surprise. Right now, Mr. Draghi is speaking. What do you think he will be saying, and how will markets be sort of reacting to that?
Well, my feeling going into the announcement was probably less than 50% probability, because the Germans are still not ready.
Well, of him introducing some more.
Well, first of all, not announcing full-blown QE. Now, the key is going to be is there was I think it was in one of the regular newspapers, not the Sun, that Draghi said, if need be, we will buy a bundle of lesser qualified securities, I feel meaning probably Greece bonds, etc., etc. So that's why we saw 2 days ago a very, very strong move in the Greek stock market, feeling that the ECB will start to bail us out. So that is that is my feeling. Okay, the LTRO, the first one was sort of what were they expecting, 100 plus, and they got 82, and so now it's going to be a question of with negative interest rates, who's going to invest with the ECB? So it really is going to be a situation where I expect, his speech to be dovish to very dovish. I mean, the last I looked, the euro was trading about 126.50. Now, I think any movement that we've seen in the euro just in the past, well, let's just say the last 2 days, since we started the quarter, was basically just some people decided, maybe I'll just reduce my all-time record short position in the euro. So, as I expected, going into the end of the quarter and the new quarter, we were seeing profit taken off probably even the Zimbabwe dollar against the US dollar, okay, as everybody was taking some profits. And we saw that profit taking, especially with dollar yen, when they traded briefly at 110 yesterday, traded at 108.50 below. And then all of a sudden you saw the Nikkei just got clobbered, okay, overnight. And then of course, the equity markets, not only here in Europe, but in the States, got nailed yesterday. And I think, is this the bubble that we've been expecting, et cetera, et cetera. So it's going to be quite interesting to see what Draghi says, not only in the speech, but in the Q&A, to see if he can allay the fears.
He's historically fairly dovish in these speeches. So we're going to go out and see the DAX another 100 points higher, do you think?
I don't know. It's going to be a question of, will the DAX be affected by the global, overflow of profit taking as we begin the fourth quarter, okay? And the interesting thing to look at is because away from, let's say, the end of Q3, we had a situation where if you go back to the post-Lehman days, we had a classic example of how the market's supposed to react. We had a strong recovery in equities. We had a fast, very strong move up in commodities with the weak dollar. Well, we've gone back to the usual suspects, okay? We had a continuation of a massive move in the equity markets. We saw a very strong move in the dollar, and we saw the traditional sell-off in commodities. I mean, as we saw, with the close of business on Friday, we saw the DAX index up for the 11th consecutive weeks. Now, the DAX has been around, your parents were just children, okay, for 43 years, and this has been the best winning streak ever for the DAX, okay? Now, it may be broken this week, but we'll have to wait to see what happens this afternoon, and of course, Friday's not.
Because of what's happened, particularly yesterday in the equity markets, and because of the strength of the dollar, is tomorrow's non-farm payroll more important than usual?
Yes, I think it will be. The question you're going to be is, we saw yesterday a sell-off. Well, I think the Dow was up well over 200 points. And the sell-off was the ISM, consumer confidence. Now, I know this may sound very strange, and I know, but when they found the guy in Dallas who's come down with the Ebola virus and the 5 students, well, how much of an effect? But I have seen it and heard about it from friends of mine in the States talking about that could be, whether it's near term or long term, could that be, again, a knock on consumer sentiment in the U.S. Now, with tomorrow's non-farm payrolls, one thing I did see was the doom and gloomers, after we got a spot on, or you want to say the depressing ADP number. It only came in at plus 213,000. Some of the people had even started to reduce. I think the Bloomberg consensus was 210. My number was 230. But they
Is this for yesterday's, not all for tomorrow?
No, for tomorrow.
Yeah.
Yeah. Talking about comparing the ADP with the Bureau of Labor Statistics and this, that, and the other. Talking about, well, tomorrow's non-farm payroll, has 250 already been discounted. So if it comes in at 210, 225, something like that, is it already in there? And also the simple fact is, looking at the August number, okay? Now the August number, the question was, the unemployment rate came in at 6.1495, okay? So therefore, it then came in at 6.1 rather than 6.2. Now, my feeling is I'm still looking at 6 or 6.1. But then again, and I was at a foreign exchange convention over the weekend, and one of the points that people kept looking at was, do we really look at non-farm payrolls? I said, well, yes and no. I said, one of the things, and I don't want to get too technical for some of our viewers, is are we now looking at U3 versus U6, employment or underemployment? Okay, and we've talked about this before. How many people here in the UK on these 0 hours contracts? They're still listed as being employed, but I mean, they're like 1 million of them. And I mean, it was like a situation where I flew back through Heathrow, okay, on Sunday night, and my flight arrived at like 11:45 in the evening. Well, the baggage handlers are from Swiss port or whatever it's called. Well, they don't work on Sunday night or something. So, it took me, and there weren't that many flights arriving, it took me almost 45 minutes just to get the luggage off because it was, there weren't enough people there. So that is one of the things that where the bullish or the bearish people were like, are we looking at U3? Are we looking at U6? And the situation where, looking at the ADP number, will we see a legitimate employment picture in this? And this is all, will it be, will we have seasonal distortions because school teachers coming back and this, that, and the other? Of course, you don't work in the States on June, July, and August.
So is a good number bad for equities still?
No, I think it's going to be a question of how long this bubble. And now it's going to be quite interesting. Was this bubble started by Bill Gross from PIMCO last week, okay? When all of a sudden, after 43 years, he said, well, I'm leaving PIMCO and I'm going to Janus. Well, all of a sudden, we had a $43 trillion global bond market collapse, like all of a sudden, and this is just one person. So is it a situation, was that one of the reasons why people said the bond market, is too rich, although, Gross had been wrong for the last 18 months, feeling 3.25 to 3.5 was where he's going. So it'd be quite interesting to see tomorrow if we get, say, 230, 235, which would be, again, consistent with a 6-month moving average. Now, is it a situation where has the bond market felt that the Fed, they didn't believe Janet Yellen, and not feeling that we would get a rate hike in June? Because Fed fund futures, and also with the 10-year Treasury note, basically implying that we won't get a rate hike until mid to late Q4. So there are a whole bunch of reasons. So now is it a situation where, after yesterday's ADP number, the people that reduced their levels below 200 are basically saying, maybe the bond market and Fed fund futures are telling us it's going to be mid to late Q4 rather than, say, June of next year.
Okay. Let's finish on these goings on in Hong Kong. What exactly is going on, and why do markets not like it? What's the big concern?
I think the big concern is that
it'll unsettle the whole of China.
Yes. And then the question is, does China dictate to Hong Kong? What, they have 7 million people versus, 63 trillion or something. And then so does China dictate to Hong Kong, or will Hong Kong dictate to China? And one of the things that the market, again, the doom and gloomers are talking about, if Beijing makes any serious concessions, okay, to the umbrella revolution, and people also, is this on the 65th anniversary of the Communist Party. Could this be the explosion of communist China, and therefore, China becoming the numero uno economy? Could it fall as quickly as maybe Russia did, when the wall came down to 89? So it's going to be quite interesting to see, and I think that's what the market's looking at. But I think what is impressing me is, I would probably say 75% of the demonstrators weren't even born when Hong Kong was given back to China from the UK. And, I don't know, I never went to any student demonstrations, I was much too old and mature. But I mean, look, they're well bred, they're well spoken. I mean, you see them cleaning the streets, there's no, no yelling or screaming. I mean, it's just amazing. And I think that's what the market's looking at, is because doing not the third plenum, which we just finished, but the second plenum 10 years ago, Hu Fengpu or Jing or whatever his name is, basically said that we're one country with two economies / two currencies. And of course, you've got the Chinese, renminbi. And I mean, I think starting yesterday, I think you can now do in Asia, I think, you can trade renminbi versus euros, okay? Although the volume is always just minuscule, okay? But the concept being is that, having two economies, you have the non-deliverable forwards, renminbi or yuan, and of course the Hong Kong dollar, which has been around since day one. So it's going to be quite interesting to see. So far, people are just talking about it. I haven't seen, because you see, probably what's helping it. Remember, China's been closed yesterday and today. Okay? So we won't see the Hang Seng until tomorrow. But now, this had nothing to do with Hong Kong, but we saw a dramatic sell-off in the Nikkei. But that was in relation to the dollar-yen at 108.50 rather than 110 plus.
Perfect.
So it's going to be, it'll be quite interesting to see. But as I say, they won't go back to work till tomorrow. But the key for tomorrow's non-farm payroll is a good number, 225 to 250. Has that been fully discounted? And if you look at the spread business, okay, I'm talking, not you guys, of course, but I mean the William Hills and the Betfix or something. They're only talking about I think 13.9% probability of that kind of number. Or excuse me, a 50% probability. Much higher than that, and below 200, I think it's 13.9%. So it's going to be quite interesting because, depending on what Draghi says, if we get non-farm payrolls at the Bloomberg consensus of 210, all of a sudden, which could have been an incredibly exciting week data-wise, is sort of what week? So it'll make it very worthwhile for us to chat.
Well,
next week.
Well, let's enjoy it tomorrow.
Yeah.
All right, thanks, Bill.